Okay, let's dive in. Is Roblox just, a game for kids? Or is it actually building something much bigger, like the foundations for the next internet? A digital economy with, huge potential, but also facing some really massive challenges. Our deep dive today suggests the market might actually be a bit too optimistic about its current value, even with all that explosive growth we've seen. Welcome to the deep dive. Today we're plunging into Roblox Corporation, that's NYSE, ticker RBLX. Our mission here is to really dissect Roblox's fundamentals, its competitive standing, and try to figure out its intrinsic value. We want to understand what's under the hood, and answer that core question about its long-term potential. Just a quick note before we start. All the analysis we're sharing today is as of August 20, 2025. The reference share price we're looking at is $118.28. So, we structured this deep dive into two main parts for you. First up, we'll be digging into the core business itself, the management team, and the financials of Roblox. Then, in the second half, we'll pivot.
We'll look at market sentiment, the ownership structures, and some pretty crucial risks facing the company before trying to bring it all together with a concluding outlook. Sound good?
Great. And before we really jump in, a quick reminder, this deep dive is brought to you with insights from Stock Analytics AI. Please do like and subscribe to their YouTube channel. For just €470 a month, members get priority deep dives on specific tickers. They're actually covering all of the S&P 500 stocks over the next few months, and members get that exclusive priority access. And hey, if you just want a one-off deep dive on a company that really matters to you, you can just drop them a super thanks. Okay, let's kick things off with part one, covering the company's business, management, and its financial health. We begin with chapter one, the digital universe, a business analysis. So at its heart, Roblox is this free-to-play platform, right? You can explore millions of experiences made by other users, all without paying anything upfront. But a company makes almost all its money selling Robux, which is their virtual currency. Users buy Robux for things like avatar items, special abilities within games, that sort of thing.
Now, for someone trying to really understand their financial health, what's the key difference we need to grasp between what they call bookings and the reported JAP revenue? Because that seems crucial.
Oh, absolutely. That distinction is fundamental to understanding Roblox. Think of bookings as the real-time pulse. It's the total dollar value of Robux sold in a period. Basically, the cash coming in the door right now.
Okay, immediate cash.
Exactly. But here's the twist. Because of their model, Roblox doesn't count all that cash as revenue immediately on their official income statement, the GAAP one. Instead, they defer it. They spread it out, recognizing it as revenue over what they estimate is the average lifetime of a paying user, which is currently about 27 months.
47 months, wow.
Yeah. So it's almost like they treat Robux sales like a subscription that lasts over 2 years.
Sure.
A big surge in bookings today, well, that translates into predictable revenue streams for Roblox far into the future. It's like a guaranteed backlog.
I see. So it smooths things out, but maybe hides the immediate boom.
Kind of. For example, look at Q2 2025. Bookings just exploded, up 51% year over year to $1.437 billion. Huge number. But the official JAP revenue, that only grew 21% to $1.081 billion. So bookings gives you a much better sense of the current cash flow strength and user demand, even though the accounting looks different.
Right, that makes sense. So sacrificing that immediate gap number for predictability and, a clearer cash picture. Okay, moving on to the actual platform. What are the core pillars holding up this Roblox ecosystem?
There are really three main parts. First, you've got the Roblox client. That's the app users interact with. Second is Roblox Studio. This is a free but surprisingly powerful set of tools that lets anyone, literally anyone, build and publish their own 3D experiences. And third, underpinning everything is the Roblox Cloud. That's all the infrastructure making it run globally.
And then you have things like the Avatar Marketplace too, right? And buying things within the games.
Exactly. The Avatar Marketplace, those in-experience purchases, it's all part of this self-contained digital economy they've built. It's a full ecosystem.
And the scale is just
Yeah.
hard to grasp sometimes. What are the latest numbers on users? How many people are actually on there every day?
It is genuinely staggering. As of Q2 2025, they reported 111.8 million daily active users, or DAUs,
111 million a day.
per day. And that's up 41% from the year before. But maybe even more impressive is the engagement. Users spent a collective 27.4 billion hours on the platform just in that one quarter.
Billion. with a B.
Billion with a B. It's like a digital nation, really. And what's really interesting and vital for their future is this demographic shift. Now, 64% of their daily active users are 13 years old or older. And this older group accounts for 66% of all the engagement hours.
So it's not just little kids anymore. That's important for making money, I imagine.
Hugely important. Older users generally have more disposable income, or at least more influence over spending. And it's truly global now. Nearly 59% of users are from outside the US and Canada, mainly Asia Pacific and the rest of the world. Shows massive international runway.
Okay, huge scale, aging up demographic, global reach. So what's the core value proposition? Why do users flock to it? And maybe more importantly, why do developers build for it?
For users, it's pretty straightforward. An almost infinite library of free, constantly changing 3D worlds and games. It's a social space, a place for identity expression, creating your avatar, and just immersive fun. For developers, though, it's incredibly compelling. Roblox basically offers them a business in a box.
Business in a box, how so?
Well, they get the creation tools, the global distribution to over 100 million users, the hosting, the payment processing, all the back-end stuff for free. Then they earn a share of the revenue generated within their experiences through the developer exchange program, the DevX program. They can convert the Robux they earn back into real money.
So Roblox handles all the hard parts developers focus on creating.
Precisely, and it's working. This creator economy is booming on the platform. Developer earnings were up 52% year over year in Q2 2025, hitting $316.4 million just in that quarter.
Wow. Okay, let's zoom out to the industry level. Roblox seems to sit at this interesting intersection, right? Online gaming, a massive market, over $250 billion in 2025. And then the Metaverse, still pretty new, but projected huge growth, like 37% CAGR through 2034. What makes Roblox stand out in this landscape? Management has this huge goal, right? 10% of the global gaming market.
Yeah, it's ambitious. What makes them distinct isn't just being early, it's that model of outsourcing content creation. Epic Games builds Fortnite, Microsoft has Minecraft, they build blockbusters. Roblox, though, builds the tools and the economy for millions of others to build their own things. It's fundamentally different. They're betting on the collective creativity of their user base, not just their own developers.
A platform versus a publisher, almost.
Mm-hmm.
So who are their main competitors then? Both direct and maybe broader?
Direct competitors, you definitely put Epic Games' Fortnite, especially its creative mode, and Microsoft's Minecraft. Unity Software is also a competitor on the engine tools side, but the competition is much wider, really. They're fighting for screen time and spending against giants like Meta Platforms with Horizon Worlds, Microsoft's whole Xbox ecosystem, Alphabet's YouTube, even big mobile players like NetEase. It's a battle for attention.
And then there's the regulatory side. That must be a constant headache with user-generated content.
Oh, absolutely. Huge challenge. You have the standard stuff like copyright issues, DMCA takedowns, but the biggest, most persistent pressure comes from child safety concerns.
Yeah, you hear about that a lot.
And it requires just massive ongoing investment in content moderation, safety tools, trust and safety teams. It's a major operational cost and, frankly, a constant reputational risk they have to manage very carefully.
Seems like a tough tightrope to walk. Now, thinking about new players entering this space, the tech to build virtual worlds is getting better all the time. What stops someone from just building a Roblox killer? What are the real barriers to entry?
That's a great question. And you're right, the core technology, while complex, isn't the main barrier anymore. The real moat, the truly formidable barrier, is Roblox's massive self-reinforcing two-sided network effect.
The network effect. Explain that a bit more.
It's that classic chicken and egg problem, but on a colossal scale. To compete, you need millions of users to attract developers, but you need thousands of developers creating cool stuff to attract millions of users. How do you build both sides simultaneously from scratch when Roblox already has this huge head start? It's incredibly difficult and expensive.
So users go where the content is, developers go where the users are, and it just keeps reinforcing itself.
Exactly. Plus, you need the underlying infrastructure. Building and running a global, low-latency cloud network capable of supporting over 100 million daily users in real-time 3D environments. That takes hundreds of millions, maybe billions, in capital investment.
Okay, so that network effect sounds incredibly powerful, almost like a competitive advantage in itself. What else gives them an edge?
Well, the brand strength is huge, especially among Gen Z and younger millennials. I mean, reports say half of all American kids under 16 use it. That's incredible reach.
And brands are noticing too, right? Like H&M, NFL.
Yeah, big brands are building experiences on Roblox now. H&M, NFL, Warner Bros. They see it as a key marketing channel to reach that younger demographic. That's massive validation.
What about cost advantages? That user-generated content model must save them a fortune compared to traditional game studios.
Absolutely. Think about it. Major game publishers might spend hundreds of millions developing one blockbuster title. Roblox essentially outsources almost all content creation to its community. They provide the tools and the platform, share the revenue, but they avoid those massive upfront R&D costs and the risk of a game flopping. It's incredibly capital light for the amount of content generated.
So that ties back into the network effect. Users attract developers, developers create content, content attracts users. A virtuous cycle.
Precisely. And this cycle creates really high switching costs. For users, their social connections are there, their digital identity, maybe items they've bought. Leaving means losing all that. For developers, switching means learning a whole new engine, a new platform, and crucially, leaving behind their established player base and their income stream on Roblox. It's sticky.
So their truly unique asset isn't just the tech, it's that community. Millions of creators, tens of millions of experiences.
That's it, exactly. That massive, diverse library of content built over more than 15 years is something no competitor can replicate quickly. It's unmatched in scale.
Okay, that gives us a really solid understanding of the business itself. Let's shift gears and look at the people running the show. Next up, Chapter 2, Management Evaluation. At the helm is co-founder and CEO David Baszucki. He's known as Builder Man on the platform, which is kind of cool. His background goes way back, with educational software like interactive physics. He seems to have had this vision for user creation since, like, 2004. How important is having that long-term founder-led perspective?
Oh, I think it's incredibly important, especially for a company with ambitions as large as Roblox's. You know, building a metaverse isn't a quarterly project. Baszucki's consistent vision over nearly 2 decades suggests a focus on long-term strategy, not just short-term results.
And the wider leadership team. Generally well regarded.
Generally, yes. They seem quite transparent, actually. Their quarterly shareholder letters are unusually detailed, packed with operational metrics like DAUs, hours engaged, average bookings per DAU. They give you a lot to work with.
But they must be under constant pressure, right?
Yeah.
Especially on that ethical reputation side with the child safety issues we mentioned.
Absolutely constant pressure. That's likely their biggest non-financial challenge. Maintaining trust and demonstrating effective safety measures is paramount, and it's something management has to address continuously and publicly.
Okay, let's talk about how they use their money. Capital allocation. It seems pretty typical for a high-growth tech company, right? Reinvest everything back into the business.
Exactly. The primary focus is organic growth. Pouring money into R&D to improve the platform, expanding infrastructure, enhancing performance, improving discovery so users find relevant experiences. They haven't really done much M&A. Acquisitions aren't a big part of the story. And definitely no dividends or share buybacks. It's all about fueling that growth engine.
Right. But then we hit this metric, return on invested capital, ROIC. Our analysis shows it at negative 33.14%. That looks, well, alarming on the surface, investing all this capital and getting a negative return. So what does this all mean when we see such a negative ROIC?
Yeah, that negative ROIC number definitely jumps out, doesn't it? It looks like they're destroying value, but you have to understand why it's negative in Roblox's specific context.
Okay, break it down for us.
Well, ROIC is typically calculated using GAAP operating income. And as we've discussed, Roblox is aggressively investing in its future. R&D, infrastructure, sales, and marketing are huge expense lines right now. This spending drives their GAAP operating income deep into the negative territory. So mathematically, you get a negative ROIC. It's essentially a reflection of their strategic choice at this moment to prioritize rapid market share capture and platform development over showing near-term GAAP profits.
So the investment thesis basically assumes these investments will pay off down the line with high returns, even if they depress current profitability metrics.
Precisely. You're betting that these substantial current investments will build an even bigger, more profitable platform in the future, which will eventually generate a very high and sustainable ROIC once that investment phase moderates. It's a bet on future scale and operating leverage.
Got it. That provides crucial context. Now let's really dig into the numbers. Time for Chapter 3, Financial Analysis. Okay, starting with the big picture. Market cap around $81.35 billion as of our analysis date. That's substantial. Reflects a lot of optimism baked in, right?
Definitely a hefty valuation. And you can see why when you look at the top line growth, it's been explosive, especially accelerated by the pandemic. Let's look at annual JAP revenue. 2020, it was $0.924 billion, up almost 82%. 2021, it more than doubled to $1.919 billion, up 108%. Then growth moderated a bit, but still strong. 2022 was $2.225 billion, up 16%. 2023, $2.799 billion, up nearly 26%. 2024 hit $3.602 billion, up almost 29%.
And the trailing 12 months.
Trailing 12 months TTM revenue is sitting at $4.023 billion, still growing at a healthy 27.4% year-over-year clip. So the top line is impressive.
Very impressive. But then we look at the margins, and it's a tale of two cities, isn't it? Gross margins is consistently high, like 77, 78%. This seems great.
It is. It shows the core business of selling Robux is fundamentally very profitable.
But then, operating and net margins are deeply negative. Operating margin was minus 26% in 2024, still around minus 23% TTM. Net margin is also around minus 24% TTM. What explains this huge gap between high gross profit and big operating losses?
It comes back to that heavy discretionary spending we talked about. The costs depressing the operating margin aren't primarily the costs of delivering the service today that's covered by the high gross margin. The losses are driven by massive investments in R&D, building new features, improving the engine, and sales and marketing, plus infrastructure build-out. These are investments for future growth.
So it signals significant latent operating leverage, meaning if they chose to slow down that growth spending, profits could appear relatively quickly.
Exactly. The potential for profitability is clearly there within the core business model. The current losses are a strategic choice, masking that underlying potential while they focus on scaling up.
Okay, that makes sense of the margins. Now, despite those gap losses, you mentioned free cash flow tells a different story.
Yes, and this is key for understanding their financial health. Despite the accounting losses, Roblox is generating significant positive free cash flow. It's been volatile, but it turned strongly positive in 2024 and seems to be accelerating. TTM free cash flow reached $941.9 million, and management's guidance for the full year 2025 is even higher, between $1.025 billion and $1.085 billion.
So they're actually bringing in substantial cash, even while reporting losses on paper. That's important. Okay, financial stability. Earnings consistency, well, it's consistently negative on a GAAP basis. And the losses per share have actually widened. That's not ideal.
No, ideally you want to see losses narrowing towards profitability.
Right. Then there's the debt-to-equity ratio. Standard reports might show a really high number, like 5.29 or even higher. Here's where it gets really interesting, because a number like that would normally be a huge red flag, wouldn't it?
Oh, absolutely. A traditional company with a DE ratio over 5 would set off major alarm bells. But for Roblox, that number is completely distorted and, frankly, misleading.
Why is that?
Two main reasons. First, a massive chunk of Roblox's liabilities isn't actually financial debt money borrowed from banks or bondholders. It's that deferred revenue we talked about earlier. Cash received for Robux not yet recognized as revenue. That's an operational liability, not a financial one. It represents future services owed, not cash needing repayment.
Okay, so the debt part of the ratio is inflated by non-debt items.
Exactly. And second, the equity part of the ratio, the denominator, is artificially suppressed. Years of accumulated GAAP losses reduce retained earnings, which shrinks the book value of equity. So you have an inflated numerator divided by a shrunken or sometimes even negative denominator. The result is meaningless.
So what's a better way to look at their leverage?
A much more useful metric here is debt to free cash flow. Looking at their actual financial debt relative to the cash they generate, that ratio is currently a very healthy 1.90.
1.9. So what does that mean practically?
It means they could theoretically pay off all their interest-bearing financial debt with less than 2 years of the free cash flow they're currently generating. That paints a picture of a financially strong company, despite the GAAP optics.
That's a critical distinction. Okay, current ratio is around 0.97. Sometimes below 1 is a concern, but given the strong FCF and cash reserves, probably not an issue here.
Agreed. Not a major concern given their cash generation capabilities.
Right.
And dividends. As a growth company, that's not applicable. They don't pay one.
Right. Now, valuation. We established PE is useless due to negative earnings. So we look at price to sales. TTMPS is around 19.6x. How does that stack up against peers?
It's very high. Gaming peers like NetEase, around 5.4x, C Limited, 5.4x, Electronic Arts, 5.9x, Take-Two, around 7x. They all trade at significantly lower PS multiples.
So that 19.6x reflects really high expectations baked into the price.
Absolutely. The market is pricing in enormous future growth, and assuming they'll successfully transition to profitability and maintain that growth, it's a premium valuation for sure.
Okay, beyond relative valuation, what about intrinsic value? Did you run a discounted cash flow model?
Yes, we did. Just briefly, a DCF model tries to estimate a company's intrinsic value by projecting its future free cash flows and discounting them back to their present value.
What were the key assumptions you used for this educational model?
Sure. For the growth rate, we assumed revenue growth averaging 21% per year over the next 5 years, based roughly on analyst consensus, then tapering down to a 3.5% terminal growth rate in perpetuity, sort of in line with long-term global GDP growth. For the discount rate, the weighted average cost of capital, or WACC, we used 9.0%. This reflects Roblox's risk profile. It has a higher beta, around 1.64, indicating more volatility than the market, but also considers its strong balance sheet and cash generation.
And what intrinsic value range did that model spit out?
Based on those assumptions, our educational DCF model yielded an estimated intrinsic value range of $95 to $125 per share.
$95 to $125.
Okay.
And important to stress, this is an analytical estimate for educational purposes, highly dependent on those assumptions, right?
Absolutely. Change the growth rate or the discount rate assumptions even slightly, and that value range can shift significantly. It's a tool for thought, not a crystal ball.
Understood. Okay, we've covered the business, management, and financials. Let's broaden our view now. Time to move into part 2 of our deep dive, where we'll explore the external factors and those all-important risks. We're starting part 2 with chapter 4, market sentiment. So what's the vibe on Wall Street? You mentioned the valuation is high. Are analysts generally bullish?
Broadly speaking, yes. The consensus rating among analysts covering the stock is a buy. Looking at the breakdown, about 36% rated a strong buy and another 33% rated a buy. So quite positive overall.
And price targets.
The average 12-month price target sits around $146.35. Compared to the current price of $118.28, that implies pretty significant potential upside according to the analysts.
You often see a wide range in these targets, right?
Oh, definitely. The range here is huge. The lowest target is down at $77. That's from TD Cowen, who actually has a sell rating, while the highest goes all the way up to $170. So analysts agree on the potential, perhaps, but disagree quite a bit on the execution risk and timeline.
Interesting split. What about the general media tone? Does it echo that analyst optimism, or is it more mixed?
It's really quite divided, actually. Financial news outlets often focus on the bullish narratives, the stock's performance, the record user engagement, those strong bookings numbers we discussed. But general news, especially international media, tends to highlight the risks much more heavily. You see more stories about lawsuits, the ongoing child safety concerns, platform bans in certain countries. It creates this tension between the financial story and the broader public perception.
Okay, what about market indicators, like short interest? Are many people betting against the stock?
Short interest is sitting somewhere between 2.96% and 3.63% of the float. That's slightly above the average for its peers, which is around 3.12%.
So not massive, but indicates some meaningful skepticism out there.
Exactly. It suggests a non-trivial number of market participants are betting the price will go down. Another indicator, just looking at price action, the share price, $118.28, is currently trading below both its 50-day moving average, $123.77, and its 200-day moving average, $122.46.
Suggesting some recent negative momentum.
Yeah, technically it points to a weakening trend in the shorter and medium term leading up to our analysis date.
All right, let's shift to who actually owns the stock.
Yeah.
Moving on to Chapter 5, ownership structure. You mentioned institutions own a huge chunk.
Overwhelmingly so. Around 94.5% of Roblox shares are held by institutional investors. We're talking the big players, Vanguard, FMR, Fidelity, BlackRock. You also see major stakes from well-respected active growth investors like Bailey Gifford and Capital Group. Their presence signals strong conviction in the long-term growth story from sophisticated investors.
What about insiders, the founders, executives? How much skin do they have in the game?
Insiders own roughly 5.16% of the company. Normally, you'd see that as decent alignment with shareholder interests. However,
There's a but.
there's a significant but here, and it's concerning. When you look at recent transactions, there's been very heavy insider selling. Over the last 12 months, insiders sold about 60.9 million shares, while only purchasing around 8.1 million.
Wow, that's a big difference. Who's selling?
CEO David Baszucki himself has been a frequent and significant seller of shares, often through prearranged trading plans, but the volume is notable nonetheless.
So management sounds optimistic publicly, but their actions, selling shares privately, that's a red flag, isn't it?
It's a classic say-do gap, and frankly, yes, it's a significant red flag. Even with prearranged plans, the sheer volume of selling raises questions about insiders' views on this stock's current valuation versus its future prospects. It's something potential investors really need to be aware of.
Despite the selling, do insiders still maintain control because of the share structure?
Yes. That's the other key piece. Roblox has a dual-class share structure. This means that certain insiders, primarily the founder Baszucki, hold shares with significantly more voting power than the common shares traded publicly. So even with diffuse institutional ownership, strategic control remains firmly in the hands of the founding team.
Okay, insider control, but heavy insider selling. An interesting dynamic. Now for a critical section. Chapter 6, Risk Assessment. Let's try to synthesize this with a quick SWOT analysis. Strengths, weaknesses, opportunities, threats. Strengths seem clear. Dominant brand, that powerful network effect, capital-light UGC model, visionary founder, strong FCF.
Agreed. Those are the core pillars of the bull case.
Weaknesses. Consistent lack of jet profitability stands out, that premium valuation we discussed,
Yeah.
and that significant insider selling we just covered. Maybe also the historical dependence on a younger demographic, though that's changing.
Right. Those are the main internal vulnerabilities.
Opportunities seem plentiful too. Expanding into older demographics, which they're doing. International growth, especially Asia-Pacific. Maybe tapping into advertising revenue eventually. Metaverse growth overall. New areas like education, virtual concerts.
Lots of potential avenues for growth, definitely.
But then, the threats. Intense competition, not just from games, but for screen time. Escalating regulatory scrutiny, especially around child safety, leading to legal action. The very real threat of countrywide bans, shifting user tastes, and reliance on Apple and Google's app stores and their fees.
That threat list is significant and seems to be growing, particularly the regulatory and geopolitical side.
How do macroeconomic factors play in? Inflation, interest rates.
Well, inflation could potentially squeeze consumer spending on discretionary items like Robux. We've seen them adjust pricing for foreign exchange fluctuations, so they might need to consider pricing power if inflation bites hard. Interest rates are maybe even more critical for a high-growth stock like Roblox. Its valuation is heavily based on expectations of large future cash flows. When interest rates rise, the discount rate, the WACC we used in the DCF, goes up. That makes those future cash flows worth less in today's dollars, putting direct downward pressure on the stock's theoretical intrinsic value.
Makes sense. And you mentioned geopolitical factors are an acute and escalating threat. Can you elaborate on that? That seems really crucial.
Look, this isn't just a theoretical risk anymore, it's happening. Qatar blocked Roblox entirely in 2025, explicitly citing child safety concerns.
Block the whole platform.
The whole platform. And reports indicate Indonesia is actively discussing similar bans for the same reasons. These are potentially large growth markets. Domestically in the U.S., you have states like Louisiana filing lawsuits alleging the company hasn't implemented adequate child safety controls.
This raises an important question. What does this mean for Roblox's global growth trajectory and its operating costs? If more countries follow suit or impose strict regulations?
It could severely impair their growth plans, especially internationally, where much of the future user growth is expected.
Yeah.
And compliance with varying, potentially strict regulations globally would almost certainly increase operating costs, significantly more moderation, more legal oversight, potentially platform redesigns. These events fundamentally challenge the investment thesis, regardless of how strong the platform itself might be.
That really puts the risk into sharp focus. Okay, let's try to pull all these threads together. Finally, we arrive at Chapter 7. Conclusion. So, summarizing the bull case, you have a dominant platform with a powerful economic moat from that network effect. Explosive growth in users, engagement, and especially bookings. They're successfully shifting to older demographics. Visionary founder, strong free cash flow generation despite the JAP losses. It's compelling.
Very compelling. The growth metrics are undeniable.
But the bear case is equally potent, isn't it? That premium valuation leaves very little margin for error if growth slows or risks materialize. The heavy insider selling is a major concern about leadership's conviction at these prices.
Definitely. And those escalating regulatory and geopolitical risks, actual bans, lawsuits are not hypothetical anymore. Plus, the persistent lack of GAAP profitability after all these years is still a factor.
So bringing back our valuation work, the educational DCF model, using those assumptions of 21% growth tapering to 3.5% and a 9.0% WACC, gave us an intrinsic value range of $95 to $125 per share.
Correct. That was the range our model suggested based on those inputs.
And the share price, as of our analysis date, August 20, 2025, was $118.28.
So what does this all mean for you as a learner navigating this complex investment landscape? Where does the current price sit relative to that value estimate?
What current price of $118.28 falls squarely within the upper end of our estimated intrinsic value range.
It suggests that based on our model and assumptions, the market has already priced in a lot of that expected future growth. It also implies the market assumes Roblox will successfully navigate the significant regulatory and competitive risks we've discussed. So from a value investing perspective, the current price appears to offer little margin of safety. It seems fairly valued, perhaps even slightly overvalued, reflecting this balance between the undeniable growth potential and the very real challenges ahead.
So not necessarily a screaming buy at this price, given the risks haven't fully played out.
It requires a strong belief that the growth will continue unabated and that management can effectively handle the regulatory storm. It's priced for near-perfect execution, you could argue.
Okay, that's a clear takeaway. Before we wrap up, maybe a final provocative thought for our listeners to chew on. Considering Roblox's powerful two-sided network effect, which seems so strong, and the increasing intense pressure from global regulators about child safety, how might the company balance its really ambitious growth targets with the absolutely essential need to make its platform safer? And what shifts might that balancing act bring to its actual economic model in the coming years? Something to ponder long after our deep dive ends. That wraps up our deep dive into Roblox Corporation. We really hope you found these insights valuable for understanding this fascinating company and its future. And please don't forget to like and subscribe to Stock Analytics AI on YouTube. Remember, members at just $4.99 a month get priority deep dives on tickers. They're covering all the S&P 500 stocks in the coming months, and members get that exclusive priority access. Or if you're just looking for a one-off deep dive on a specific company, you can always drop them a super thanks.
And just a crucial reminder, this analysis was generated by an AI system purely for educational purposes. It should absolutely not be considered financial advice. Always, always conduct your own thorough research or consult with a qualified financial advisor before making any investment decisions. Knowledge is most valuable when you understand it critically and apply it wisely.
Could agree more. Thanks for joining us for this deep dive. We'll catch you next time.